Hi, everyone, and welcome back to another episode of AI Interconnect, where we explore how technology, AI, and human insight are reshaping industries across PropTech, real estate, and beyond. Today, I'm joined by David Michaud, founder and CEO of Parvis, leading real estate investment platform that's making property investing accessible to everyone through fractional ownership and digital innovation. David, it is great to have you here. How have you been doing?
Thank you so much for having me. I'm great.
Wonderful. Okay, I'm very excited, and we are in Canada. Then Parvis has become a recognizable name in the Canadian PropTech scene. Before we dive into the platform, I'd love to hear a bit about your personal journey. What led you to create Parvis and enter the PropTech space?
Yeah, that's a big question. Not quite sure where to start. First I want to point out that I'm an insider in the sense that I come from institutional finance, and I'm not an outsider trying to disrupt finance. I'm not saying it's a better approach, but that's just my story. Worked mainly in Canada for about 15 to 20 years as a finance and banking lawyer. I worked mainly in house for various financial institutions, some recognizable names. I was senior legal counsel at National Bank of Canada for quite some time. And then before starting Parvis, I was a legal director as well at Sierra Capital Corporation, which is at the time, I think they had about 180 billion in AUM across the world. So that's my ins- institutional journey, really doing M&A, structuring new investment funds, launching investment products, both at the retail and institutional side. But it's really when I was at Fiera that I started to develop real estate properties and invest in alternative products. And that's when I came across the capital raising at more of a retail level, anywhere between and 50,000 or 20,000 to $1 million. And I felt that that space was grossly underserved. And really, it's out of necessities where I saw an opening. I saw a space where it was a very, very difficult for smaller issuers to raise capital. And on the flip side of that, it was always, or at least from my perspective, it was always institutional funds and larger family offices that had access to the quality real estate and alternative investments. Um, really, I just went to the drawing board. I thought uh, there has to be another way than to sit in front of what we call here a dealing representative, which is a financial advisor in the private side, sit in front of someone with 200 pages of paper with scary disclaimers on top of each other, not really knowing what they are, but they've been told somewhere along the line that they need them to get signed. And it was that non client friendly experience that led me to start Parvis.
Okay, wonderful. I love it already. I think you answered my following question. Let's start at the beginning. Um, what inspired you to launch Parvis? And the question you may have answered already, but you may have maybe something to say, is what gap in the market did you see that others were not addressing?
Yeah. Well, I've worked directly with regulators across different jurisdictions in my previous life as a finance lawyer. So my perspective is quite unique because I had insight into what's possible versus what's prohibited in some ways. And it's that experience that led me to see a need in the industry. And there's a lot of people that, especially on the retail side, qualified investors on the retail side that wanted access to private equity products and they just couldn't find them. And we made that accessible.
Yeah, no, that makes a lot of sense. How you find a niche. Many funders talk about the friction between traditional real estate investing and and the modern investor experience. What were the main problems you wanted to solve when you started building Parvis?
Yeah. Well, if we take a step back and we talk about real estate and alternatives generally, it's historically been an exceptional asset class to generate generational wealth. The access to it was always limited for a number of reasons. And the main one was the regulatory framework around it, the prospectus requirements, the need to be accredited at a certain level. And that historically has created a lot of limits to that type of investment. The second thing, it was essentially the lack of liquidity into the space. It's very tough for retail qualified investors to essentially park an investment for 5, 6, I've seen 7 years in some cases in close ended structures where you can't pull that money out. Even if you trigger some of the redemption clauses, there's some penalties to be paid. So really for me, I wanted to fix two things very simply. The first thing was to streamline that investment process from start to finish. And the second thing was to essentially inject liquidity into this very illiquid asset class. So if we start with the first item, we created a platform that makes it really easy for an investor, a qualified investor, to invest a few $100,000 in an alternative product. We have KYC, AML. We create a marketplace for a product where investors can go in and conduct their own appreciation and to a certain extent due diligence on a product. We have full contract integration on the platform, full payment integration, and then we also interact with trust companies for registered funds in Canada. So we've made the process as smooth as possible, and we were one of the first in Canada to do so. Now, maybe I should explain this at the get go, but we have in Canada a really fragmented securities law system. It's regulated by province. It's harmonized to a certain extent with the Canadian Securities Administrator, but there's still nuances provincially, unlike a lot of different countries like the US or certain European countries as well. So it makes it very difficult to operate and to scale in this space. But we've looked at it, we've remapped the entire process from start to finish. We're really like we pen and paper with little lines, and we really mapped out the framework to really make this easier for investors. And it was all about the investor journey and making sure that we don't ask the same question twice. We can make an investor click instead of signing 4 times or popping another PDF document. So to streamline the investment process was really important to us, and we're recognized by that. Essentially, I was interviewing recently for a chief compliance officer position, and this person had worked with one of the largest exempt market dealer in Canada, and told me that she signed up on our platform and looked at how we did that for them to try to reproduce what we were doing. The second thing that we did, we set up a blockchain backed secondary market to make it easier for investors to retrade their assets before the end of the underlying term. There's a lot of restrictions around that. There's certain types of investment funds that you can't really trade, but it was the first step in the right direction. And we were one of the first in Canada essentially to have both a primary market and a secondary market in one platform.
Okay. Uh, awesome. Um, I mean, yeah, exactly. Then for listeners who are not familiar, can you walk us through what Parvis actually does on a day-to-day basis? What's the experience like for an individual investor using your platform, beside the click?
Yeah, we started a few years ago, so we're relatively new in this space. We received our licenses to operate in September of 2022, and then we've been scaling up very quickly. So in a short period of time, we grew to about 40 plus, I think 45 licensed advisors selling our product. We now have about 55 issuers on the platform, mainly developers raising capital for real estate projects. We have private REITs, and we also have private lenders raising capital for their own debt funds. So it's been moving very quickly. And at the same time, now we have thousands of active investors on the platform, shopping every day, looking at the different portfolios and different offerings that we have. So, to go back to your question, essentially, we have investors coming directly to the platform. Typically, they see us online at investor events. They see us through our very robust SEO strategy, or they come through our license dealing representatives, and often they come through issuers themselves that bring in their clients for us to process. And what they see is about 55 products, all private products that they could choose from. So a typical investor will be a dentist from Toronto that has 1 million, $1.5 million to invest in private deals. Recently, they may have read a Bloomberg article saying that they need to invest more in private capital now, that the old 80-20 split is now more of a 60-40 split, a 40 being in private market. And then they look at our different offerings, and we essentially put them in four buckets. We have four risk assessments that we put, and it's color coded, traditionally from core to opportunistic. And really what we see portfolios being created. We have the private lender that's been yielding 8% steadily for the past 15 years. That's very robust and safe. And then we have a development project downtown Toronto yielding 35%. That has obviously more risk to it. So we see investor create portfolios, often with the help of our licensed advisors that guide them through the process. So that's generally how it works. We have a platform that is issuer friendly as well, not only client friendly, meaning that the issuer can go into a client account and populate some information, open the account there, and prompt their client or our client to continue in the investment process.
But you have built it's a marketplace that connects developers, advisors, investors in one place. How do you balance serving those different stakeholders effectively?
Yeah, I think you've nailed our model in one word. It's a marketplace. What keeps me up at night? No, that's not accurate. I sleep well at night, but figure of speech, what keeps me up at night is essentially the need to balance both sides. So we have a supply and a demand platform where we have about 55 issuers right now that are all looking for capital. So if we would have $60 billion tomorrow, we could fill all these buckets very easily. And some of them have open ended products. So we could probably, it's unlimited. Let's put it that way. And so supply, so that side is not a problem. That side of the marketplace. In fact, we have about 40 to 45, maybe more issuers right now that want to join our platform, that want that end-to-end service of being essentially the back office, taking care of compliance because we're regulated because we do it in a compliant way, because we have that reputation of being a strong compliance firm first. And then we have a lead generation and marketing service, and we have a tech portal to really enable our investors to have real-time access to their data, to get updates on these projects. So that's why these issuers come to us. The problem is finding the investors. Everybody is looking for accredited investors, qualified investors. And accredited investors in Canada has pretty much the same definition as the US. So it's just under 5% of the population, of the total population. And everybody is vying for their attention. Everybody from all the big banks to all the large asset managers to Porsche and Rolex, everybody wants their money. So we compete for that same money, and we need to attract them to the platform. Now, having a marketplace is very useful for a lot of these investors because they get to invest 5 or 6 products without having to create 5 or 6 relationships with 5 or 6 different back offices of different issuers. And they get that in a neatly organized tech-enabled portal. And that's been part of our growing success.
Yeah, that's awesome. It's not managed accounts.
No, so for the time being, we essentially act as a broker dealer we match investors with issuers. And we do have a fund, which is called the Parvis Direct Access Fund that we launched recently. But essentially, we don't manage assets at this time. Definitely, there's a few things in the roadmap that we're looking at, but we act as a matchmaker. You can see it as a fancy dating site for issuers and qualified investors.
That's sexy. Okay, then one of the most interesting things about Parvis is its compliant first structure. And you have managed to make it easy for investor while staying within the Canadian securities regulation. How complex is that side of the business, and how do you handle it without slowing innovation?
Yeah. Yeah, I'm not patronizing when I say that's a very, very, very good question because it's at the core of our model. We went into this with the first premise that we would disrupt the industry, but we would do so from within the industry. We essentially have a lot of people on the team that come from institutional finance. We have lawyers, we have CFAs that have worked for various large institutions, banks, but then we have tech people and younger blockchain AI type of employees that have the disinclination to look at this model from a different angle. So we essentially look at every problem with the same question. How can we do this better? How can we do this faster while respecting the same regulations that apply to us? And often you don't need to really fully disrupt or blow the entire model up. You just need to look around and see why some things been done in the same way. Often it's because you have platforms like ours in the past that had people going in through regulatory audits that would just be told by senior officials, oh, you need this new disclaimer, you need this new form, and you need to get the client signed 5 times. And if you can do it in wet ink, it's even better for us because we like it. But often you need to really ask the same question. Well, where can you provide the regulatory hook for that? What's the regulation that tells me that I need to do that? What's the regulatory policy? How do you view the policy? And have this dialogue with the regulator. But more importantly, show them that you want to respect the same rule. You have the best interest of the investor at heart, but you just want to scale up and do things more efficiently to have the fewer friction between an investor and where the money goes to work.
Yeah, yeah, that's of course very good answer. Okay, then the prop tech and digital investment space had changed rapidly. And from your perspective, what are the most important trends you're seeing in 2025?
Tokenization, really, we've entered this market. Essentially, I wanted to start this company by tokenizing the entire platform 4 years ago. Crypto wasn't doing so well then. I remember we were raising money and we were talking to a lot of older people on the other side, often people, not because they're old, but often more inclined to understand what blockchain or even crypto meant. And we were trying not to scare them away. We didn't even use the word blockchain with certain investors because we were looking to raise capital in our space. What I'm trying to say is that we're seeing it right now. We're on the cusp of huge changes in the real estate industry and the alternative industry. And for us at Parvis, we managed to tokenize the secondary market, but the primary market is still very much old fashioned in the sense that we sell limited partnership units or JV units or shares of corporations, all private, of course. But in the next year, there will be a first Canadian stablecoin. There will be different ways to look at processing funds in the back end that make and leveraging blockchain makes it super easy. Um, Obviously, if I say that the two items that will be the most disruptive is blockchain and then AI won't come to surprise. It's really disruptive what we see in our space in a very good way. We are starting to leverage AI more and more, and often We see different uses of AI that are more mainstream, but we love it for scaling compliance, for example. We can generate a compliance report now in a few seconds. We love using AI to review all of our lengthy offering memorandums, limited partnership agreements, and we've trained different models to make it really easy for us to review and scale the model. We also have AI tools to scan any regulatory changes or legislative proposals out there, just to make sure that we understand what's coming and that we prepare for it. So yeah, in short, really tokenization of the space and AI from start to finish.
Yeah. No, of course, that makes sense. Um, Now, AI, I mean, you may read your 250 pages regulation very fast thanks to AI.
Yeah, and then there's a lot of uses as well, other than the ones I mentioned. Right? I mean, we could probably take the entire hour to talk about how we could leverage AI to make things better at Parvis, from document processing, even investor matching. Now we have a tool that we're working on that we're about to launch, which is essentially a KYC, know your client, and a product recommendation tool that our advisors will be able to use. And clients will be able to use when they look at our 50 plus products on our shelf. And the problem that other platforms like ours or more traditional E&Ds have had in the past is that they could only focus on 2 to 6 to 12 products because these tools didn't exist in the past. They had to do this manually. They had to report to the regulator. They had to essentially have hundreds of PDFs for every single client. And that model is simply not scalable. I think the use of our technology and our timing is what makes Parvis very successful right now.
Yeah, that's great. And do you think technology can solve the trust gap that often exists between investors and real estate projects?
Yeah, I think so because we're conducting pretty robust due diligence on every single one of our offerings. And we not only review the documentation provided by the issuer, but we also have industry data that we scrape from different sources. And we're building a model really to look at different metrics in different jurisdictions to see if what an issuer has in their financial models or performa matches with what we see in the industry. So I think from that perspective, we are building a lot of trust within the industry because we can quickly tell if a product is not great, and then we can quickly tell if a product is not suitable for a certain investor.
E- Every funder faces friction on the way up. What are some of the biggest challenges you have faced building Parvis?
I mean, there's friction every single day.
Of course.
Some days I miss my corporate job where I was one of many. I mean, some days you have a client that has, tech issue that you need to attend to. One of our advisors need assistance with something. But yeah, it's been a journey. It's been really difficult, but in a good way. Because I'm at the core, I'm a problem solver. I'm a doer. And having to jump from head of HR to head of tech one day uh, is pretty challenging when you don't have a background in those fields. But I wouldn't change it. It's been a very very fun journey. In just 4 years now, we were able to start a company from an idea, from a name. We branded the company. We started from scratch. We incorporated, and now we process millions per month on the platform from private investors from across Canada. We now have products from outside of Canada, and we became publicly traded in 2023 on TSXV. So every single day there's a new challenge,
Yes.
and I mean I can't put my finger on one because there's some every single day, but that's the fun part. The biggest challenge in my life has been to become a full-time entrepreneur, to be honest. I mean, you hear of people starting companies, failing, making a lot of money. But really, it's until you start a company from an idea and you try to grow it that you see how difficult it is. It's difficult to gain a market. It's difficult to navigate the regulatory environment. It's difficult to manage employees. It's difficult to do a lot with just a few dollars. It's really really a huge challenge. And I have a bunch of university degrees and wrote law exams and bar exams, and I can tell you by far this is the most difficult thing I've had to do in my entire.
Yeah, I love it. But I mean, with success up to now, and as you say, a couple of failures make you rebound, and you learn from that. Um, how do you handle the dual challenge of educating both investor and advisor about those new ways to invest?
Yeah, well, at first, like again, if we look at from a marketplace point of view, where you have issuers, private issuers trying to distribute their product, and then you have private investors looking to invest into these deals. On the issuer side, it was an easy sell, surprisingly. So I'll share something with you that I haven't really shared with a lot of people. When I started this company, I was sure that it was a B to C business, that I could go out there and bypass a lot of fee takers. I would see people on the institutional side getting money from qualified investors where they would return 8% after all the fee takers would be satisfied. And then they'd go out and put it to work at 30%. So that aspect, I thought I will set up a marketing company. I will set up an online marketplace with a robust SEO strategy, nothing old school, nothing old fashioned, and they will come. It's going to be a B2C play. But it turned out that it wasn't a B2C play at first. It was a B2B play. Because when we started to talk to developers, issuers that had private REITs or private VC funds, and they wanted to raise money, they looked at us quickly and saw a back office play for them. We could become their compliance. They didn't have to maintain EMD registration, which is very costly to have a chief compliance officer go through the audits and all of that. Then we had a marketing service where we could go out and market their product, generate leads, and raise capital for them. Then we had the tech portal, all things that they could probably find elsewhere, but we had them in one stop shop. I think to this day, we're the only Canadian exempt market dealer that offers that. So quickly, all of these developers or issuers saw us as a cost saving, no brainer type of transaction where they would outsource those services to us. So that grew very, very quickly. Now, in this world, as you know, in the financial services or financial institution world, it's all about trust. And it takes time to create a reputation. And there's been new players in our field that have come and go, and some have failed. So it took a while for investors to really trust us. But quickly they got to know our advisors, most of which are amazing. And all of them are amazing. And then we have a very robust team as well. We have, like I described earlier, people with institutional finance background, with CFAs and law degrees, and then we have the tech portion of that. I like to brag that we have two University of Toronto guys that handle all our processing and back office, two engineers from U of T.
Genius.
So we have a very robust team. So when investors, to get back to your question, Laurent, when investors started to deal with our team and see who was behind our team and what Parvis was and the type of service that we provided, and then they saw the type of issuers in Canada, some of the largest issuers, the private issuers in Canada have joined our platform, they quickly noticed that we were not just another EMD. In fact, we've grown to a certain level right now that rivals some of the most established exempt market dealers that have been here for like 15 to 20 years.
I love it. Yeah, exactly. You mentioned trust, compliance, liquidity. These are often barriers in private real estate. And I have an idea about which one of those has been the hardest to overcome for you. I think trust. And what have you learned from that process? I mean, maybe all the three of them. I don't know.
Yeah. Well, like I've seen larger financial institutions, like mid-market type players really do well only after 10, 15 years being in business. We're very humble and grateful that we have this early success and that we're scaling up very quickly. And I think that was the hardest thing to achieve in such a short period of time. The tech is nice, the regulatory licenses is nice. We have a great team, but to gain the trust of investors this quickly, it's very humbling, and it makes us want to get up in the morning and do a lot more. Some investors have shared with us that they love the model. They love to have a marketplace to have access to all of these great products. And we've identified a few pain points that we want to fix as well. There's more to come, and a lot of it stems from our investors, their comments and what they want to see. So obviously we want to do more, but we appreciate the thousands of investors that now trust Parvis for their private investment needs.
Yeah, they trust you and give you feedback. That means they care. What has been your biggest leadership lesson so far running Parvis?
Has to be managing people and communicating. In the first few years of Parvis, it's only been 4. So, but the first few years, I was working and doing stuff for 18 hours a day. I was doing business development. I was doing HR. I was doing contract review, negotiating with suppliers, handling customer requests, and during that time, admittedly, I was not communicating well to my board and to stakeholders, people in the industry. So what I've tried to change, and I have great mentors that have helped me to do that better. I've tried to communicate things in a better way, more frequently, more details. And now I have direct communication with my board members. I make sure that any changes within the company is communicated to all the employees. So in the morning, I shoot 10, 15 emails. I take on 4 or 5 calls just to make sure that people understand what we're doing and where we're going. I've noticed that even if I think I do the right things, if I don't explain why, people don't see it the same way. And as soon as I take the time to explain to them, this is why I'm making these changes. This is why I had to make this decision. And this is where we're taking the company, then I get way better results across the board.
Yeah, that makes sense. That's great. Then looking ahead, what's next for Parvis? Are you focusing more on expanding the advisory network or onboarding new developers or improving the investor experience? All of the above.
Yeah, yeah, yeah. There's a lot of things that we're looking at right now. We're working on really interesting partnerships that will propel our growth. And we're also looking at acquiring other smaller players in the industry. And obviously, I'm not violating any securities law. We're publicly traded, but all of this has been sent by press release before. So M&A is going to be a big area for us this year, given the fact that there's about 120 exempt market dealers in Canada, and some of which are very small, some of which are captive, meaning they're tied to a specific issuer. But there's a lot of room to consolidate right now in this space. And we're going to go out there and grow from M&A, from acquisitions, and from partnerships. But obviously, we are recruiting new advisors every week. We have conversations with advisors from the industry, and we're growing the investor base organically as well. Every day there's a handful, there's 10, 15, 20 new private investors that sign up to the platform and invest right away. Some ask questions. So we're growing from different sides. But obviously we want to stay focused to a plan and execute in the right direction.
Wonderful. Bravo. Do you see Parvis expanding outside of Canada for the next few years or focusing on the impact in Canadian market first?
Yeah. So for the first 4 years, our focus has been in Canada. I mentioned earlier, it's a fragmented space. It's archaic. Not a lot of technology is being leveraged, and there's room for consolidation. So for us, becoming the leading marketplace in Canada was our number one objective, and I think we're there. We've been described as such by peers in the industry, so I'll take their word for it. But but recently, we started to onboard global issuers. We have a real estate development play in Mexico. We have one in Costa Rica as well. Great and skilled developers that we've teamed up with. And we also recently signed a chaperone agreement with a US SEC licensed broker dealer that enables us to raise capital from institutional investors in the US. We are looking at the US market and more and the global markets. And we also have a global investment fund that we launched earlier this year, the Parvis Global Opportunity Fund that enables us to process capital from abroad and bring them in Canada. So it's kind of both ways. We're looking at servicing international investors that want to invest into historically stable and high yielding Canadian alternative projects and Canadian investors looking to invest abroad as well.
Yeah, I love it. Let's take a step back, and the prop tech landscape is getting crowded. What makes Parvis different?
Yeah, we live on we're a little bit of juxtaposition because we some days some days I go in meetings with a black T-shirt like this, and then the next day I wear a suit and a tie because we're a fintech, we're a prop tech play, but we're also a financial institution. We're regulated. We have people that have worked in financial industries, and we play on both sides. So we're growing the company from both sides at the same time. It makes us unique in that way. It has challenges, but I think it's been working so far.
That's wonderful. Yeah, she does. And David, that has been a great conversation. And Parvis is clearly building something with long-term impact, bridging accessibility and innovation in real estate investing. And thank you so much for joining me and sharing your insight today.
Thank you so much, Laurent. Have a good day.
Where can people find you, or how easy for your company to get info?
Harvestinvest.com.
Of course.
That easy.
Wonderful. It's a real pleasure, David. Thank you so much.
Thank you.
And that's it for today's episode of AI Interconnect. And if you enjoyed it, share it with someone who is building the future, or better yet, someone who should be. And until next time, stay curious, stay creative, and keep building. Thank you, David. Bye.